All right. Top 5 things to watch next week, Kev. So let's jump right into it. So number 5, we've got some more of these European PMIs. The pessimism is maximum in Europe, and Draghi's reign is over. Is it really as simple as bringing a change of the guard and suddenly the sentiment toward Europe can shift that quick?
So I'm always interested in what's baked into the market versus what it's actually going to happen. Like, so I think you guys, as we spoke about the euro, there's a lot of pessimism built into the European market. Even if they just stop doing things wrong, everything might rally because so many people think it's the end of the world there. So many people are convinced that it's just going to, descend into a deflationary collapse, and that anything short of that might actually cause the euro to rally, might cause the stocks to rally. And interestingly enough, Patrick, have you looked at our little DB lately?
No.
I don't want to goocher
no.
it.
Yeah, you're totally going to goocher yourself, but it's actually
I'm going to goocher it.
But let's take a look, because listen. In all fairness, I took a victory lap when it was down at below 650. I goochered myself, so I want you to counter goocher it by taking your victory lap here. Quickly.
Not a chance. Until this stakes in my belly, it's still fair game. You could win, and there's no way I'm going to tempt the market gods. But let's just go to the European PMIs. I suspect they're going to be bad, but they're not going to be as bad as the market expects.
Is already priced in, yeah.
And that's what I still contend that on the whole, it'll be bad there, just not as bad as the market expects.
And what's interesting is that they're all coming out Monday morning for us out in North America. So it's a Sunday overnight. So we're going to really see the market impact right at the Monday market open, if there's any impact at all. But it'll be interesting.
Watch for it Monday morning.
Yeah. So number 4, U.S. GDP, and we have. This is something interesting, because what we have is a global manufacturing recession that has never manifested itself into a slowdown in the GDP numbers, at least not in any meaningful way. And I keep waiting for these GDP numbers to downtick, and they don't. I mean, are we getting another 2% number in here?
I don't know, Patrick. Like that, to me, GDP is like one of the worst economic numbers to look at. It's a backward looking that's based upon other numbers. I just think by the time that, even if we get a downtick in GDP, by the time that we actually know the official number, the market's already looking past that. So to me, I almost think it's the top 5 things to watch.
It is the
but I think
indicator.
I think it's just it's gonna be if it's an outlier, I think you fade it either way, because it's a lagging indicator. Anyways, number 3.
Yeah. Number 3. Now, this is an interesting thing I wanted to talk about. So one of the big shifts, and it was not only your little shift in Deutsche Bank, or even the big rally we saw in Canadian banks. I'm sure there's a big short guy that is a little upset about his long-term short holdings of Canadian banks. But
because the U.S. banks are doing well.
No, but Steve Eisman.
Oh, I thought you were talking about me.
No, I was. You put yourself in the same league as Steve Eisman. Hey, all right. All right, but he's been outspoken about those Canadian bank shorts, and they seem to have been going straight up since then, right?
Yeah, but he got his face ripped off.
For a very short-term period, absolutely. But one of the big things for me is that one of the big rallies in once that momentum value shift happened was this big breakout in JP Morgan, which is pretty much pressing 52-week highs. I believe that is 52-week highs. And what I'm so interested in, we'll talk about the S&P broadly, and the thing is that is JP Morgan going to join like Microsoft as like the leaders, the generals in another advance in the market? Now, every bone in my body is bearish, but I'm a trader like you, and if the market wants to go higher, what business do I have getting in its way? What's interesting is that is there a changing of the guard? Will these banks actually be important in the next phase of a rally, if there is a rally? What's your feeling? Is this a breakout for real?
So I don't think that we have to have a situation where the market screams higher because banks are headed higher. And I go back to the idea that if all of a sudden we could have a situation where J.P. Morgan and Citi and all these banks are headed higher, and Amazon, Microsoft, and Facebook get crushed. So I don't like. Although I understand your argument that banks are often the kind of, I don't know, signal for the economy, I just don't think that those things work as well as they used to, especially in this age of lots of different ETFs, of different styles and things like that. So although I am bullish on the banks, I don't think that means that you should go buy the U.S. stock market with both fists.
Okay.
And in fact, I would almost say, I think that.
So focus on the banks more as a sector play.
I think the banks are going to listen. I've been bullish on the banks for a long time.
But let me rephrase the question then to you.
Yeah.
Okay, let's say the S&P's going to 3,300. Is J.P. Morgan and the financials going to be one of the top 5 performing sectors? Let's say top 3 performing sectors.
Yes.
Okay.
Without a doubt.
Okay, then you. Anyway, you answered my question. Your question, the answer to your number 3 is yes, it will be based on your opinion. I'm not going to actually. I'm not even going to take the other side of that. I mean, that's definitely in my mind a possibility.
I could also see a situation where J.P. Morgan screams higher and the indexes go nowhere to down. Yeah.
Well, you know what? It's a very good possibility because I'm massively underweight these financials. So the market leaving the bus leaving the station without me on it is actually a very very high probability, right?
You should buy some Deutsche Bank. Number 2, to hedge your stake bet is okay. So this is mine because we were talking about top 5 things to watch next week. I think it's really important to watch the response from the Saudis and the U.S. to the bombing of their energy assets. And the question is there a military response or is it purely just
sanctions and
things like
talks
that?
And, yeah. I
don't know, but I don't know. I'm not predicting. I worry that there will be a military response. I don't think that that's the proper bet, but I worry about it. But I think it is a top 5 things to watch because it's going to really dictate the tone of it. If all of a sudden there is a strike, which, I don't know. What would you give the odds? I give it maybe 1 in 5. But that 1 in 5 has an outsized reaction because I don't think the market is ready for that.
Well, I'll tell you, if it is a 1 in 5 chance that there is one, I suspect that it would not be the U.S. military, though. I think that
no, I agree with you. I don't think it will be the U.S. either. But I'm just saying that an escalation of military tensions is not expected by the market. I think you get a situation where oil really spikes and holds. And I'm actually nervous about that the market is not ready for it. To me, it's all about what the market is expecting and ready for and what's priced in. And there seems to be no worries about this. This doesn't seem to be on anyone's radar.
I'll tell you right now, I feel that reflected in oil, the fact that oil, when it hit, like, let's say the WTI went like 62, then dropped back down to like 58. And the fact that we're seeing oil backing off is this idea that things have de-escalated very quickly. And I think that if the outlier chance that something does happen, like, I think there's another full leg higher coming in crude.
Yeah, I 100% agree.
Yeah,
I think that it would just be the start, and we look back and go, "Why were we so dumb?" But I'm not predicting that. I'm just saying that's the top 5 thing to watch.
All right, Kev. It's now number 1. I wanted to ask that important question. S&P 500. Is this going to finally break out, or is it going to reject along its previous high? And it's fascinating where we are and when we are here on this S&P. So we're literally trading very close to that 52-week high, haven't broken out to new highs, and we're going into that quad witching. Right, we're going into where a number of really smart quant guys were talking about this huge gamma exposure on the S&P options that are dragging or pulling the market up into this 3,000 to 3,050 level. But all of that over the weekend rolls off, right? And
Right, and if we remember back to Scott Murray, he was, the volatility whiz. He said that this is the typical playbook: is that it rallies into expiration and then sells off after the expiry.
And so the thing is that what bothers me about this is that it's this whole idea that we're going into a recession and it has everyone materially underweight the markets. Everybody seems to be positioning defensively like this is a money in the bank, and then you have quad witching rolling off. You have the blackout window for corporate buybacks coming in as we approach earnings. Everything says this market should give back, and even just talking about this repo and the fact that the liquidity is being drained, going back to Barton, like we have all of these things driving. And the question I have for you, is it this easy that, hey, we'll just short right here and it's money in the bank to the downside? That bothers me, that it almost seems to be too perfect of a setup. I almost feel like the market is going to go higher just to kind of wash out all these people that think it's this easy. No?
Well, so Patrick, it's funny that we've almost changed rules here, because I'm going to say that I am worried about it. I do think that the chances of it rolling over are much higher. I think the market is actually very complacent given the worries that are happening in the repo. And I look at this and I think to myself, if we do get a breakout, I would fade the breakout. I think that this might be a prairie dog if we get a breakout. And then not only that, I'm not even sure that we do get the breakout and that it doesn't just follow the script like Scott Murray and many of the other kind of quants have been saying, that it just rolls over.
Well, you know
here.
what? I don't want to go through that for you, so I'll take the other side of that. I feel that the market needs to first wash out all the weak hands that are jumping onto the story. And so I actually think that the market actually first pops higher, kind of cleans out all the shorts as everyone takes the parade for the 52-week new highs and bull market is resuming, and then the rug gets pulled out when everyone is the worst positioned for it.
So a breakout you think actually has legs? It won't be just a classic. It won't be
long enough to fake
dog.
everyone out, and so let's see. But listen, there's no doubt that with quad witching, corporate buybacks, this liquidity stuff, everything is saying that this should be a double top. And is it that easy? That's the only question I'm asking, right? Like, I'm personally straddled, so I couldn't care less which way it goes. But you know what? Let's see whether it first fakes out on the upside.
Okay, well, there you go. If there is a fake out, I think it'll be short-lived and it'll actually be at most a day or two.
All right, let's move on.